Greetings, Ben Murray here with another edition of SaaS Metrics School. So today, talking about public company trends, and Meritech Software has a newsletter called Meritech Software Pulse that I subscribe to, and they have some frequent updates on just public companies or public software company metrics trends. And so today, checking out this email and looking at median net dollar retention trends for public SaaS companies. And where is this going? So, of course, net dollar retention looks at the revenue in our existing customer base and how much we're keeping in the form of expansion offset by downgrades and churn. So, of course, we want this number above 100%. So, looking at public company trends, the latest reported quarter, and this is Q2 of 23, the median was at 114%, so 114%. And this has been dropping. Q1 of 23, 115%. Q4 of 2022, 116%. And then for the previous 5 quarters prior to that, running around 119% pretty consistently. So you can see we've had a decline for the last 3 quarters of net dollar retention. And this is median numbers, so 114%. So interesting to see. Looks like it's getting a little bit tougher, as we know, to keep those as existing customers as everybody's tightening up their software spend. So it's important to measure net dollar retention for our business. So that's public company trends that we're seeing per Meritech and the data that they're calculating. What about private SaaS? What numbers should we be going for private SaaS companies? Of course, I partner with Ray Reich at benchmark.ai, got great SaaS metrics benchmarks. So some of the kind of rules of thumb that I look at, if you're targeting mid-market enterprise customers, so higher ACV contracts, it's pretty clear, common, or just it comes up a lot, usually best in class companies operating at 120% and above for net dollar or net revenue retention. If you're targeting those bigger ACV customers in the private SaaS world, we're shooting for 120% and above. Now, for smaller price point businesses, I'm going to lower that threshold by 10 points. So 110% and above, looking at that for best in class. Now, what if you're B2C? Not as many good benchmarks out there for B2C. Say if you're in app stores, Apple, an Apple app, $5 a month, $10 a month, maybe it's $10 a year, whatever it might be. Then, in my opinion, looking for numbers just to hit 100%. Really hard to hit, those higher net dollar retention when we're in that B2C world. And again, if you have some benchmarks out there for B2C, please send those my way. But generally, going to lower that then down to 100%. We just want to have some net expansion in our existing customer base. So that's what I'm looking at, when I help and coach SaaS companies in the private space, just some of those general benchmarks that I'm looking at. Of course, you can grab benchmarks by going out to benchmark.ai if you want your custom benchmark set. So just interesting, make sure you're calculating net dollar retention for your SaaS company. You've got the right MRR schedule in place. It's just a key component, a fundamental data component that we need to manage our SaaS business. So just a quick update on NDR.